Hello and welcome. As it is the completion of the 25th day of October 2019, my name is Derek. Like always, all bets, trades, and of the like, within each his own risk and their own reward. For those that people say that technical analysis is bullshit and stuff like that, it was only luck. They're probably right. That price action came up to this and a piercing above for that matter too. The 1823, closing the week at 18 even. Exitation of the 18, attempt to get things going, yada yada yada. Nothing more to report at least until Sunday night. Bitcoin is a holy shit moment. So that's at least it looks like it's the start of what could be that. Let's take a look at such. And I suppose on Friday's session it was up 16%. So far today it's up 13. On the triple day term time frame, I guess another way of looking at it, we're up with 32%. So spectacular moves that you can see on the triple day getting above the 18 average. Earlier today, I talked about this failed breakdown, and you know what? It was just luck that it did what I was stating and stuff like failed move, fast move, and stuff like that. Again, those who say technical analysis doesn't mean anything. I mean, I suppose you could say that they don't know how to use it, or they haven't put a lot of effort and time, or even just the ability of understanding how to use it. And there's so many different ways to win in this crypto market. And well, one of the things I've been stating within this entire range is clear break either to that of 6,300 if we break down, which it did right there, but of course it was a failed one. It never went nowhere near it, lowing at like around 72, 73. And then breaking this resistance of a clear level around 86 gets up to above 10,000. As I was saying, it would probably come into this area here, and that's exactly what it did. But that's just lucky, technical analysis, yeah, whatever. So then, let's take a look at this failed move even further. I guess the triple hour term time frame is going to show us some interesting little things in here as a phenomenal move to say the least. And there's the key level that it broke down below. And whenever you do this, it's always the same. You draw that little rectangular box like this. It's the inverted, what I call, this is one of the early things that I called was like the Bart Simpson formation. Just draw like, and I'm a terrible artist, so this is how, when I was like 12 years old, 22, and 42 years old, I would draw Bart Simpson's head. And I think when I was 12 years old, no, 14 years old, 15 years old, that's when Bart Simpson was alive. I was actually talking with a friend the other day, someone who's a year younger than me, and I was basically saying, Bart Simpson's just a little younger than us, and he's 10 years old. I'm just saying, this show's been on for so long. But this level of support was taken through, didn't go to 63. This entire range that it was trading within, it consolidated and congested within it for, well, two full 3 hour portions. So a good part of the day today. It did all of this after that holy shit moment, and within it, now what does this? Where does this stand on a more longer term time frame? Okay, well let's now take a look at this again at the daily. And what was the trend before from the June 21st breakout to the September 24th breakdown? It was this descending triangle, rectangular range, and I can't say, I mean descending triangle. And I need a print screen on this now. Log scale is fine. What I'm doing is I'm pushing the print screen, but before I do this, I want to go like this. That would be nicer. Let me just eliminate that. And I'm pushing print screen now, and I'm just going to bring up paint. And draw a line. I mean, most likely it's hitting it. You want to connect these points the best as possible. I think this is the obvious one, and yeah, of course it hits it perfectly. All right. So the trend in which we were in, but basically what this is, again, it's that failed. breakdown pattern. And within this failed breakdown, you had a small breakdown within what this one is. For me to see signs of this entire move to be a failed one, well, the first thing is, I mean, you at least got to get up to this area and piercing above it, whatever, which is that. This is the whatever. It has pierced above it. Of course, I'm talking about that line at the 96, just basically this line in here. And if this is a bearish situation where we talk about lower highs and lower lows, which is the definition of trend, and in such, you got low, and of course, all of these highs. So that means in a bearish spot, you'd be retracing lower and not making higher highs and eventually breaking down below the previous ones. On the failed move situation, what I need to see happen, let's just ignore the trend line. There's the failed breakdown in here. I need to see it really get back into its previous congestion range. Anywhere in this point in here. Sort of like the previous congestion range on this failed breakdown was this entire move in here. The fast move has already happened for this one. Failed move, fast move, and a fast move, concise move, is a clear break of this resistance. That's what that would be. And of course, a clear break would have been even up to here, and of course, it's even done more. So it's been a really good one. Okay. So therefore, now just a wait and see situation, because when we take a look at this now further with the key Fibonacci levels that have been showing for about a year. Well, right now, price action is about $20 above it, not quite, at 98.31. As I'm doing this, 2200 hours, 34 minutes Eastern Time. And of course, it has pierced above extra, again, as I've expected. So this run is based on this low of 3,000 and the high that was put in at around 20. And we'll take a look at that within the, let's look at the other, I want to look at the other time frames, but before we do, of course, above the 18, always the same thing. If it's going to resist, the holding must hold where it came from, 18 lows, 18 lows if it resists now. Definitely where it comes from, because if this just shoots up to 14,000, then the 18 lows, when it just rises rapidly, doesn't have to hold immediate. But we'll get into that if that event happens. But that's, of course, where the hold needs to be. Okay, let's take a look at 3-day and then the weekly. And the Fibonacci, again, from this high and to this low. So we've been able to see this Fibonacci since early December of last year. Got above the 23.6, no resistance at 38.2, and no support there, because that's what that move would have been, a move down to here. We can see that the failed move, whenever you go below like a key fib level, like especially when you go below 38 to the 50, support them like that and have a fast move, that's just a strong signal, which usually tells me that we should have two of two things come in, who knows, on the third. The first of the two things is a retest of previous high near 13,000. Now, the probabilities are that we're going to find little to no resistance there if this is going to be the old daddy of failed moves, especially when we didn't resist 61.8 in the first place. Okay, so then if that's the first one, the second one is a retest of previous high. And then the third one is breaking it with, who knows, little, and I'll say again, little to no resistance. And little resistance could mean coming back, losing only half its value is just little resistance. And that's the volatility of these markets. It's up 30%. It's a holy shit kind of moment day. But at the same point, it's a signal, it's a message, a statement, and it's doing a statement on a 30% move that we're going to be getting things going here, getting active, and we're doing this on a Friday night. We're heading into Saturday and Sunday when bankers are quote unquote closed within the markets. And generally speaking, on Fridays, it's like, okay, not much is ever going to happen on Saturday, Sunday, not until Sunday night and early Monday morning. But who knows? This is a wild session that has transpired within the market. Bitcoin dominance is most certainly having a dominant move as well. On its triple day, as the same time frame, I'll go back to Bitcoin because I did want to look at the longer terms with this move. But we can see here it's making a move. Now this key is Fibonacci from here to here is something that I see. Okay, we've had a key level. This is been the best correction now since this April point. And this has been the best correction from this high. So this is what makes it very interesting. Something to keep an eye. 61.8%. If this thing gets above 72.1 and all that, then this thing could fly well above, and that most likely would mean Bitcoin having even phenomenal moves there after that. But that's just to keep an eye, kind of see. Let's go back to Bitcoin, and in viewing it on the weekly, price action has had a good correction. That's what this was. We topped way back when, which was early 2018. We're almost into early 2020, or almost 2 years later. Since then, it has had a noticeable high, at a very high or low, very high because the last low was in a 214. It could have came back to where we came from at this 1,000 mark. It didn't, and it doesn't look like right now that it's going to. Not with what the statement made in today's session, let alone that 6,000 number. And for those who are, and I already did a Simpsons reference before, for those who are waiting to buy at 63, you can almost use that Nelson Muntz laugh, ha ha. And I'm not good at it. And even for those who sold on the way down because they got nailed on the fail, and there's a lot of people who got trapped on that failed breakdown, and these markets are always going to have that happen. Failed breakouts, failed breakdowns. As long as there's people trading markets in this type of mechanism, it's never ever going to stop. At least not anytime soon. And they're going to continue to happen in 2020, 21, 22, 23, 24, so on and so forth. They happened in the 1990s, 1980s as well. At least I would, yeah, they definitely happened. Although don't quote me on that, but I mean it, it's almost like it was the chances that it rained in New York sometime in July in 1978. It probably did. Okay, so then, and I don't even know about that one either, but it probably did. So that's the weekly chart. We have consolidation within the 18. It did have the dip below. The band starting to flatten out, going down, but this move in here will at least make the 18 average start to flatten. 18 average of highs, same thing as well. It's got to get a clear break above 11.5 and the low 11,000s, and then this thing is in a very big, oh my goodness mode, ready to get going, especially with this failed breakdown as we've been talking about in here, which you could definitely see has some validity to it, as price action needs to get back, of course, within this range. That's what it's doing right now, and then getting out above here. That again, that's the first little thing, is most likely a good chance of going here. But all we might do is correct this way, and maybe it supports it, but meaning it goes up and then does anything like that. There's just so many different variables that can come into play. After all, that technical analysis doesn't mean anything in this market, as I said on the front. The fact that it actually went to that Fibonacci and it's doing all that at this level again, it's only luck. It's just mathematics being lucky. And finally, on the monthly chart, it's really just, again, continuation of this correction on the 18. 18 lows at 6,000. Doesn't look yet like we're going to support it. It still can. But if we're going to get this pattern of get to no resistance here, no resistance here, we resist above it, we have supported the highs. If you get support of the highs and then exitation of the 18, that is, I mean, really, break of this just looks so probable. That's why the case number 3 of the breakout spots is something that I would take very serious in looking at just the chart, throwing everything about fundamentals and not giving a shit about that, because you're only looking at this. You're only looking at numbers. You're looking at the pattern. You're looking at the 18. You're trying to get a flow, and I realize if this is a failed breakdown here, the ultimate one, failed move, which was the failure from the November sell-off. So we were looking at the third one here. And what have we been seeing in here? Staying within this level. This is pretty sick here. So the mathematical chances over the next 12 periods, which is 1 year from now, of having price significantly above here, which would be like at least somewhere around here. So hitting like the 60, 70, between 50, 60, 70 ballpark area, give or take, of course, is realistic. It's pretty high. Again, all bets, trades, and of the like within each his own risk and their own reward. Have yourself a great day. And yeah, this whole thing about like failed move fast, move technical analysis. Remember, it's all there's a lot of people who've commented and say technical analysis doesn't mean anything. Okay, now they'll give you their reasons. Have yourself a great day. Bye bye.